Mona, it's good to talk to you. What do you make of what Bill Miller said and what Jeffrey Gundlach tweeted?
Great. Thank you, Scott. Thanks for having me. And I really commend you and the team for doing all these interviews via phone. It's just so essential right now. So thank you for that. Based on what we've seen thus far, I do empathize with Ackman here. A couple of things to note. One, I think sometime over the last week, markets have really woken up to the reality that the U.S. and clearly the European economies have been essentially shut down. There was some hope building that we could go, towards the path of a China or South Korea. But the numbers over the last few days in particular, particularly in certain parts of the U.S., show a trajectory that's much more like that of Italy. So now, the administration has woken up to the reality of social distancing. We have seen full or partial shutdowns in major economic and financial centers in the U.S., like New York, San Francisco, L.A. And if I could just make another point, perhaps the other part of the story here that markets may not yet be fully coming to grips with is that there was a report out by the Imperial College of London saying that essentially this social distancing we have now will have to remain in place until there is some vaccination or antiviral. We heard from Dr. Gottlieb earlier that that may be coming later in the summer or early fall. But if you let people really start socializing or interacting once again before this is, in place, you really may once again risk reinfection. So, in order for the markets to stabilize, I think now we not only have to see a plateau in the number of cases, we also have to see a viable treatment before we can give really an all clear here.
Do you take anything in the way that the market closed, the way stocks rose off their worst levels into the close, how futures look positive tonight? Of course, no guarantee that that holds until the morning. And a suggestion that I've heard this evening that what Ackman represented may have been peak fear. And you do need to see that perhaps at some point to some investors.
Yeah, it's a great point. Markets are driven by fear and greed. And when there's fear on the road, as they say, that's really when you should start thinking about buying. And for those of us that are long-term investors, we don't think the fundamental health of the U.S. economy is derailed by this pandemic. Longer term, we will see a return to normal economic activity. That rebound at some point will be substantial. So for those of us that have the appetite, it could be an interesting start to building in positions. That being said, if you think about some of the S&P scenarios that are being laid out, there could be potential downside to go. And just so you know, if we apply a S&P earnings growth rate, for example, of negative 10%, and put a 15 times multiple on that, that gets us to 2,200, about 10% down from here. If you put a 10 times multiple on it, we're down to, 30+% downside. And so there are a lot of moving parts to this. I do think we could have increased or elevated volatility still over the next few weeks. But like I said, a lot of us in the investment community were waiting for better risk-reward opportunities.
Mona, we appreciate your time. Thank you for your point of view and perspective
Thank you,
this
Scott.
evening. Mona Mahajan of Allianz.